Most people think gold and silver prices move because of charts, trends, or breaking news. But what if I told you that what you see on the screen is not the real market at all? What if the biggest moves in gold and silver have nothing to do with supply and demand and everything to do with a system designed to control perception? Stay with me, because by the end of this video, you will never look at gold and silver the same way again. Gold and silver are not just metals, they are money. They have been money for thousands of years, long before stocks, bonds, or even paper currency existed. And that is exactly why they are dangerous to the modern financial system. When gold and silver rise sharply, they expose weakness in fiat currencies, especially the US dollar, and that is something the system cannot afford to let happen openly. Welcome back to Empire Economics, where we break down what the mainstream refuses to explain. If you care about understanding real money, real power, and real economics, make sure you hit like and subscribe right now. It helps the channel grow, and it tells the algorithm that you want more content like this. Trust me, you don't want to miss what's coming next. Now, let's get one thing clear early on. This video is not about drawing lines on charts or predicting the next short-term move. Charts are only the surface. The real story is underneath, in the structure of the market itself, because gold and silver are traded in a system that looks free on the outside, but is heavily managed behind the scenes. Most people believe gold prices move when inflation rises, when interest rates change, or when there's fear in the market. Sometimes that appears true, but then strange things happen. Inflation hits record highs, money printing explodes, debt skyrockets, and gold does nothing. Or worse, it goes down. Silver, which should be flying, suddenly crashes in minutes with no news at all, and that's when people get confused and start losing interest, and that confusion is by design. To understand manipulation, you first need to understand the difference between physical metal and paper metal. Physical gold and silver are simple. They are bars, coins, real things you can hold. But paper gold and silver are contracts, promises, numbers on a screen. And here's the key point most people miss. The paper market is many times bigger than the physical market. We're talking about hundreds of ounces of paper gold traded for every single ounce of real gold that actually exists. This means price is not set by people buying coins or bars. Price is set by massive institutions, trading paper contracts back and forth at lightning speed. These trades can happen in the middle of the night, during low-volume hours, when normal investors are asleep. Suddenly, thousands of contracts hit the market at once, pushing the price down violently. No rational seller would dump that much at once unless the goal was to move price, not to get the best deal. And this is where the system shows its hand. Large banks act as market makers. They have deep connections to central banks, governments, and regulators. They are allowed to hold massive short positions in gold and silver, positions so large that if a normal trader tried the same thing, they would be shut down instantly. But these banks get a free pass. Why would they want to keep gold and silver prices low? Because gold and silver are the mirror of the dollar. When metals rise, confidence in paper money falls. When metals are suppressed, the system looks stable, even if it's rotten underneath. Low metal prices help keep inflation expectations under control, at least psychologically. Think about it this way. If gold was trading at $10,000 an ounce, what would that say about the value of the dollar? What would it say about debt, savings, pensions, and the entire financial system? It would scream that something is very wrong. So instead of fixing the system, it's easier to manage the signal. Silver is even more interesting. Silver is both money and an industrial metal. It's used in electronics, solar panels, medical equipment, and more. Demand keeps rising, supply struggles to keep up, and yet price remains strangely muted. That should raise serious questions. There have been moments when the physical market has shown stress. Dealers run out of inventory, premiums explode, delivery times stretch longer and longer. This means real silver is becoming harder to get, even while the paper price says everything is fine. That disconnect is one of the biggest red flags in modern markets. Another trick of the system is volatility. Sudden crashes scare retail investors. People buy silver, price drops hard in minutes, and they panic, sell. Then price slowly recovers. Over time, this trains people to believe metals are risky, unstable, and not worth holding long term. Again, this helps protect the system. But here's the part that almost no one talks about. Manipulation does not mean total control forever. It means delay. It means smoothing, suppressing, stretching time. The system can push prices down, but it cannot create metal out of thin air. Physical supply still matters in the end. Throughout history, every paper system eventually breaks when confidence is lost. Gold and silver always survive. Empires fall, currencies collapse, but the metals remain. That's not opinion, that's historical fact. Right now, we are living in the most debt-heavy, money-printed era in human history. Trillions created from nothing. Interest on debt that can never realistically be paid back. And yet, gold and silver prices do not reflect that reality. That alone should tell you something is off. So the real question is not if gold and silver are manipulated. The real question is, how long can this system hold together before physical reality overwhelms paper promises? Because once confidence breaks, it doesn't crack slowly, it snaps. And this is where things start to get really interesting, because the signs of stress are already showing beneath the surface, even if most people aren't paying attention yet. What most people don't realize is that manipulation leaves fingerprints. You just need to know where to look. One of the biggest signs is the growing gap between paper prices and physical reality. On paper, gold and silver look calm, controlled, almost boring. But in the real world, something very different is happening. Central banks themselves quietly tell the story. And while the public is distracted by stocks, crypto, and headlines, central banks around the world have been buying record amounts of physical gold. Not paper contracts, real bars, real metal. They don't announce this loudly, and they definitely don't explain why on mainstream media, but their actions speak louder than words. Ask yourself a simple question. If gold is outdated, if it's just a barbarous relic like some economists claim, why are the most powerful financial institutions on the planet rushing to accumulate it? Why are they reducing dollar exposure while telling the public the system is strong? That contradiction alone should make you pause. Silver shows stress in a different way. Above ground silver inventories are much smaller than people think. Silver gets consumed. It doesn't just sit in vaults forever like gold. Once it's used in electronics or industry, much of it is gone for good. Recycling exists, but it doesn't come close to meeting growing demand. This creates a ticking clock. At the same time, paper silver trading continues as if supply is unlimited. This is where the system becomes fragile. As long as most traders never ask for delivery, the game continues. But if too many people demand physical metal at once, the paper promises get exposed. History gives us plenty of warnings. Every time paper claims exceed real assets for too long, the ending is never pretty. It doesn't matter how advanced the technology is or how confident the experts sound. Reality always wins eventually. Another important point is psychology. The system depends on belief. As long as people trust that markets are fair, that prices are real, and that money will hold value, everything keeps running. But trust is not permanent. It erodes slowly, then suddenly all at once. Think back to moments of crisis. Banks failing overnight, markets being halted, withdrawals being limited. Each event chips away at confidence. Gold and silver are insurance against that loss of trust. That's why they must be controlled as long as possible. This doesn't mean prices can never rise. They can, and they do. But the rises are managed. Sharp moves are capped. Pullbacks are engineered. The goal is to prevent panic, prevent awareness, and prevent a rush into real money. But here's the problem the system cannot solve. Time. Debt keeps growing. Money printing continues. Real resources become harder to extract. Energy costs rise. Supply chains remain fragile. You cannot print metal. You cannot fake scarcity forever. At some point, the effort required to suppress prices becomes too large. The paper market grows more unstable. Leverage increases. One shock, one delivery failure, one loss of confidence can trigger a chain reaction. When that happens, price doesn't adjust slowly. It reprices violently. This is why understanding the system matters more than watching daily charts. Charts tell you what happened. Structure tells you what must happen eventually. Gold and silver are not get-rich-quick trades. They are protection against a system that depends on illusion. At Empire Economics, our goal is not to scare you, but to prepare you, to help you see the bigger picture instead of reacting to short-term noise. Most people wake up only after the damage is done. The smart ones pay attention before that moment arrives. Now, here's something important. None of this means you should panic buy or sell anything. It means you should question narratives. It means you should understand why prices behave in ways that don't make sense on the surface. And it means you should think long-term, not emotionally. Gold and silver don't need hype. They don't need trends. They simply wait. And history shows they are very patient. If this video made you think differently, I want to hear from you. Drop a comment below and tell me what you think is the biggest lie about gold and silver markets today. Do you believe the system can hold control? Or do you think we're closer to a breaking point than most people realize? If you found value in this breakdown, share this video with someone who still believes prices always reflect reality. These conversations matter, and the more people who understand the system, the harder it becomes to hide the truth. And make sure you're subscribed to Empire Economics, because this is exactly the kind of content we'll keep bringing you. No hype, no fear. Just real talk about money, power, and the systems that shape our future. Because once you see how the game is played, you stop being a pawn and you start thinking like an insider.